Welcome to the Valuation Desk by Highland Global, where SBA business valuations speak bank. Thank you for joining me to discuss a critical issue at the intersection of business valuation and financing: the impact of liquor license quotas on SBA loans. For lenders, buyers, and valuation professionals in states with these quotas, this topic is more than academic. It's a real-world challenge that can make or break a deal. Let's dive in. In states like Arizona, Florida, New Jersey, and Pennsylvania, liquor licenses aren't just permits, they're scarce commodities. Quotas cap the number of licenses based on population. This scarcity creates a secondary market where licenses trade like prime real estate. In high-demand areas, think urban New Jersey or coastal Florida, a single license can cost $250,000 to over $1 million. That's not pocket change. It's a massive premium that can dwarf a business's operating cash flow. Why does this matter? These licenses are often bundled into the sale of restaurants or bars, inflating purchase prices far beyond what the business's profits justify. And that's where the trouble starts when you're financing through an SBA 7A loan. SBA 7A loans are a lifeline for small business acquisitions, but they come with strict rules. The valuation must focus on the business as a going concern. Generally, that means it's all about cash flow. If a restaurant generates $100,000 a year in free cash flow, an appraiser might value the total enterprise at $600,000, which includes all the inventory, FF&E, and the licenses and permits necessary to operate the restaurant, including the liquor license. The catch? The restaurant is located in Florida, and there are no liquor licenses currently available in the county. On the open market, that liquor license might fetch $750,000. How do you bridge that gap? For lenders, this disconnect means walking a tightrope. You're bound by SBA guidelines to finance only the appraised value, but borrowers expect loans that match the purchase price. If the buyer is acquiring the going concern, consider engaging an appraiser to value the FF&E and the liquor license separately and individually. This suggests that the sum of the parts is worth more than the whole of the business based on its cash flow. The appraiser then uses these appraisals and the asset approach to produce the fair market value of the business. But if the buyer is acquiring the business just to use the liquor license in another location or for another business model, the premise of value changes from that of a going concern to liquidation, and that changes the value. Plus, the buyer in this scenario doesn't align with the hypothetical financial buyer under the fair market value standard required by the SBA. This leaves valuation professionals and lenders caught in the middle, balancing market realities with SBA compliance. So what can we do? Let's break it down. For lenders, communication is key. From day one, explain the SBA's valuation approach to borrowers. Set realistic expectations about loan amounts and explore creative structures, like combining SBA loans with mezzanine debt to close financing gaps. Explore appraisals of the FF&E and liquor license individually as part of the overall valuation framework. For buyers, do your homework. Research the license's market value through state liquor boards or brokers to negotiate smarter. If the SBA loan falls short, consider options like seller financing, where the seller agrees to deferred payments, or partnering with equity investors to cover the license premium. Private lenders are another route, but beware of higher rates. Liquor license quotas create a unique hurdle for SBA 7A lending, pitting market-driven license values against cash flow-based appraisals. Whether you're a lender, buyer, or appraiser, understanding this disconnect is the first step to smarter deals. Thanks for joining us for this episode of the Valuation Desk. When you need clarity, confidence, and credibility, experience makes all the difference. At Highland Global, every appraisal is backed by decades of expertise and thousands of completed reports. We don't just crunch numbers. We provide insight, context, and defensible conclusions that lenders can count on. Whether it's a business acquisition or equipment appraisal, our seasoned approach helps ensure your deal moves forward with precision and trust. For more information on valuation-related topics, be sure to visit our website, highlandglobal.com. Lenders know experience matters most.